Hello and welcome class 11 commerce students. Today in this class I am going to explain to you how to recognize the two accounts from a given transaction. How you can identify the two accounts involved in a transaction. A transaction will be given to you. This is a transaction. I have told you previously also that a transaction is any kind of monetary event. Any event involving money is called a transaction. So from this given transaction, how can you identify two accounts? Accounts means personal, real or nominal. Among these three accounts, you have to identify any two accounts from a given transaction. How you will identify the accounts, that I will show you through certain transactions that I will provide to you. So this is a transaction. These type of transactions you will be given, and as per the rule of double entry system, states that each transaction is having two accounts. Two accounts are affected. One account will be debit and the other will be credit. That is a different issue. That is a further issue. But the first thing you have to do is you have to identify the two accounts. Now suppose a transaction is given to you over here. X Limited purchased a machinery for rupees 10,000. X Limited purchased a machinery for rupees 10,000. So what are the two accounts involved in this statement? X Limited is purchasing a machinery. So what it is purchasing? A machinery, and it is purchasing the machinery for money, in exchange of money, that is cash. So the two accounts involved in these transaction is number one, machinery, and number two is cash. In this way, you have to identify the two accounts involved. The two accounts involved in a transaction, and then you have to name the accounts. You have to name the accounts. That is, machinery is an asset, so that is real account, and cash is also an asset, so it is also real account. It is also real account. Now from this part we have identified that there are two accounts, machinery account and cash account. Machinery account is real account, whereas cash account is also real account. So both of these are real account. Now after this we will try to remember, we will try to keep in mind the golden rule. Always we will try to keep in mind the golden rule, because here you have to, after the identification of the account, you have to apply the golden rule. Here you have to apply the golden rule. In the golden rule there were three sections. The rule for real account you have to apply over here. In golden account there were three different rules for three different accounts. Remember, I have done previously also that there were three different rules set up for three different accounts. Personal account was having a different rule. Again, nominal account was having a different rule, and real account was also having a different rule. Here in real account, what comes in, the rule was what comes in debit and what goes out is credit. What comes in is debit and what goes out is credit. Here machinery is being purchased by X Limited. Please notice carefully, X Limited is purchasing a machinery for rupees 10,000. So machinery is coming in, because machinery it is purchasing. The company is purchasing means machinery is coming into the business. So machinery is coming in according to real account funda. Machinery is coming in. So machinery will be debit. Machinery will be considered as debit because it is coming in as per the golden rule set for real account. Whereas while purchasing the machinery for cash, machinery was purchased for cash. So cash is another account. Cash we are giving to purchase the machinery. We are giving the cash to purchase the machinery. So machinery is coming in, whereas cash is going out. Cash is going out, and the rule, remember the rule for real account was what goes out in real account will be treated as credit. What goes out in real account will be treated as credit. So this will be definitely credit. Definitely the other account will be credit. In this way, you will identify first from a given transaction, you will identify the two accounts first, and after identification of these accounts, you will apply the rule of golden rules for the account that is identified. If personal account, different rule will be applied. If nominal account, a different rule is applied as per the golden rule. And this is real account. So I have applied here the rule for real account. The golden rule for real account was what comes in debit and what goes out credit. I repeat, what comes in debit and what goes out credit. Here X Limited is purchasing the machinery. So from the viewpoint of X Limited, machinery is coming in. So machinery will be treated as debit, and in lieu of cash, cash is going out. So cash will be treated as credit. Definitely, according to double entry system, in one transaction, the two accounts which you are identifying, one will be debit and the other will be credit. Definitely, you cannot get two debit items or two credit items. So one will definitely be credit and the other will be credit. So if one is debit, the other must be credit. You have to identify which account is debited and which account is credited. Here machinery is debited because machinery is coming in from the viewpoint of X Limited, and cash is going out. Cash is going out. So cash will be credited as per the golden rule. So through this transaction, I have explained how you will identify the two accounts, and then applying the golden rule, you have to debit one account and the other account you have to treat as credit. Through another transaction, I will give the illustration. Suppose another transaction is paid wages to worker. Paid wages to worker, rupees 5,000. Another transaction I am giving. Suppose furniture sold for cash. Furniture sold for cash, rupees 3,000. These are again two illustration. I am giving you very simple and basic illustration because this is the first class of identification of accounts from a transaction. This is the first class of identification of two accounts involved in a transaction. So for this reason, I am giving you very basic transaction just to clear your idea, just to grow a concept in your mind. So these three basic transactions I have given today. We will learn more and more transaction in the future classes where you can form an idea how we will identify the two accounts involved in a transaction. In today's class I have given just two and three basic transaction so that it is helpful for you to form an idea, to form a concept of how we will identify the two accounts and which account is to be debited and which account is to be credited. Now the second transaction is paid wages to worker, rupees 5,000. Paid wages to worker, rupees 5,000. So here what are the two accounts? One is paid what? Paid wages. Wages is one account. And the other account will be cash, that is rupees 5,000. Wages paid rupees 5,000. So the two accounts involved in this transaction are wages and cash. Wages and cash. Now first we will try to identify these two accounts. Wages is nominal account. Remember, nominal account, all the expenses and income are nominal account. So wages is an expense. Paid wages means paid a remuneration to the worker, which is an expense. So all expenses are treated as nominal account. That's why wages is nominal account. And cash. Cash, as I have told earlier, cash is an asset, so it is a real account. It is a real account. Now the question is, now since we have identified which two accounts are there and the types of the accounts also we have identified. We have identified that wages is nominal account, it is because it is an expense, and cash is also a real account because it is an asset. So here in bracket you will write the reason, the remark, why you are considering wages as nominal account, because it is treated as an expense and cash is an asset. That's why it belongs to real account, because asset is real account. That's why wages and cash, these two are nominal account and real account respectively. Now, coming to the debit and credit concept. While doing the debit and credit, we must always remember the golden rule, and we must follow the golden rule also. The golden rule states that in nominal account, all the expenses and losses are debit. All the expenses and losses are debit as per the golden rule. So this wages will be treated as DR, that is debit. And here cash. Cash is a real account. What was the rule for real account in golden, stated in golden rules? That is, what goes out was credit. What goes out was credit. As I have told you earlier, to purchase machinery, cash is going out. So here to pay wages also cash is going out. In order to pay wages to the worker, cash is going out. So whatever goes out in case of real account, the golden rule states that whatever goes out will be credit. And definitely it will be credit, because once we have found out the debit, we can easily identify that this will be credit. Because according to double entry system, in case of two account, if you have identified the two account and you have identified one as the debit, the other one will definitely be credit, because debit and credit are the two aspects of double entry system. Coming to the third transaction. The third transaction is furniture sold for cash. Furniture sold for cash 3,000. Here furniture is one account and cash is the other account. So the two accounts are furniture and cash. These are the two accounts involved in this transaction, furniture and cash. Here, furniture is real account because it is asset. Furniture is real account because it is asset. Just like this machinery. Machinery was also an asset. That's why it was a real account, and furniture is also an asset. So this is a real account. Whereas cash is also a real account being an asset. Cash is also a real account being an asset. So both are real account, but one will be debit and the other will be credit. Now how will you identify that which one will be debit and which one will be credit? From this transaction, please note carefully, furniture is sold. Furniture is sold. That means furniture is going out. When we sell something, cash is coming in and furniture is going out. Furniture is going out, cash is coming in. So following the rule of real account as per stated in golden rule, whatever goes out is credit and whatever comes in, what comes in is debit. Here in this transaction, cash is coming in. So cash will be debit and furniture is going out. So furniture will be credit. I repeat, furniture is sold. So furniture is going out. Whatever is going out, that will be credit, and cash is coming in, because whenever we are selling something, we are getting cash. So cash is coming in, and as per the real account, in the golden rules, whatever comes in is treated as debit and whatever goes out will be treated as credit. And we have followed the golden rules, and accordingly we have done the 3 identification of the accounts and the 3 sorting out of debit and credit. So I hope whatever I have explained through this basic transaction, you have got a clear idea how we will identify the different accounts from a transaction, and also we will identify the debit and the credit following the double entry system. I will come up with more transaction and I will present to you more illustration so that your concept gets clear day by day. Please follow the class carefully. I hope whatever I have explained to you today, you have understood. Wait for my next class. Thank you.